Celebratory mood, I must say. Anuj Singhal has been calling it right for some time now that the initiative is with the bulls. And yesterday we had one hell of a rally. Today the Wall Street and the Asian markets are giving us similar cues.
Oh yes, but we've been moving on our own trajectory. It's been a fabulous move. Yesterday was clearly a party for the bulls, Latha. I mean, Anuj and me were sitting during closing bell, and the momentum just picked up so much in the last 1 hour of trade, and that was justified by quite a bit of buying as well. Not just by FIIs in the cash market, which was to the tune of almost 750 crores of buying, but in index futures as well, there was almost 1,500 crores of buying that we saw yesterday. So the numbers are also justifying the kind of move. Also, the volatility index has fallen about 5%, so it's now below that 15 mark. So it just indicates that perhaps, traders believe that maybe the volatility will reduce going ahead. They're not that worried. And if you look at individual stocks as well, perhaps because of the government simplifying the rules for foreign investors by clubbing different categories, a lot of these banks saw delivery-based buying. So Axis Bank saw about 450 crores, HDFC saw quite a bit as well. But overall, the week has been good. Yesterday was good. Do you get a sense that the macros are stacking up well?
No, I was particularly impressed by that 745 crore of FII buying. This is larger than the other numbers. We've been getting positive numbers for some time, but that was positive. I mean, no two ways about it. And you could see it in the FX market yesterday. There was just about everyone saying RBI is buying. And that was why the bonds fell. Because normally when RBI is buying, there's cash going into the system. And you will actually see bond prices rising. But yesterday it was not rising because there was so much of cash coming into the system that dealers were getting convinced that there will be an OMO. You get that kind of conviction from the market only when there is genuinely so much of money coming in. Oh God, there's too much of dollar flow. RBI will have to do something. They will do an OMO. That was reverberating in several treasury rooms. So my sense is clearly the FII mood has changed dramatically from the kind of outflows we saw in the March, April, May months. And that could be explained by the way in which the world data and events have changed over the past 1 month. For one thing, IMF itself reduced the global growth figures. We know that after that stock market bubble in China, if anything, there are fears that the growth picture could get trimmed at the edges to the negative. Consumption could take a little bit of a beating. Notwithstanding the official Chinese numbers, the fear is that things would slow down a bit more. In Europe, because of Greece, again, there is a fear that things might slow down a bit more. And whatever it was, what was Yellen's testimony to the House of Representatives, to the Finance Committee, that the economy is not strong enough. I will hike, but I don't think the time has come yet. The labour market is still very weak. So she's actually saying the economy is not all that strong, but I will, look for an opportunity to hike rates once. So you're getting weakness stories everywhere. In contrast to that, if anything, people are saying earnings will do better in India. The estimates may be high and they may get trimmed, but nobody is saying that Q1, Q2, Q3 of this year is going to be worse than Q4. Yes. The growth trajectory is a given. And like you pointed out, that FI, FDI cap being merged. Yes. Simplifying rules, making India a slightly better place to work. Yeah. The land bill as well, trying to circumvent the opposition in parliament by giving states by finding a way whereby states which want to change the land law can go ahead and do it. That right was always available, but accepting that as one way to get things done, or even if it is Digital India, Skill India or Jan Dhan. In this world where economies seem to be broken everywhere, here's some economy which appears to be at a slightly better trajectory in mending its economy. Yes. A lot more needs to be mended, but at least it is getting mended. So probably that's why the FI sentiment appears to be turning.
No, I take your point completely. I mean, we have been mapping this government since it came into power, and we know that this government is making a concerted effort to at least increase the ease of doing business, and now even to make global capital enter India easily with, these rules, etc. But Anuj, well, you spotted this. You were telling us that the market could perhaps see higher levels, and now we've seen more than 2,000 crores of buying by FIIs in the past 4-5 trading sessions. Is this a rally that could sustain?
And are you worried about the DIs selling? Because that's, for me, if they are the savvier guys, why is it a sell?
I'll tell you one thing. In Gujarati, there's a saying, Bhav Bhagwan Che. At the end of the day, nothing matters. If you are a trader, ticker is your religion and price is your God. As simple as that. And for last many days, that's been the case. The data has been pointing to bullishness, but more than that, the screen has been telling you that it's bullish all around. And at the end of the day, you respect the screen. The market is wiser, is smarter than all others put together. That's the most simple and plain adage that anyone can have. You can have different views. You can have Credit Suisse downgrading you. You can have CLSA upgrading you. At the end of the day, the market will tell you what it believes.
No, I'm taking that point. What I'm asking you is what happens for here on. We are
Yes.
ending a week which has been extremely good for the bulls.
Yes.
But in a weekend, you normally would want to take profit, as well as there is a DII selling. So I'm asking you a much more near-term question. That at this point in time, should you be brave and be even more bullish, or should you be cautious?
I think the message that the market is giving loud and clear is that you should be buying.
Be bullish.
Be bullish. The way to play this market, I think I take Sonia's point a bit, the India VIX, but on that, I think there's slightly differing view because you've seen the India VIX now collapse so much, it was down 5%, so there's a minor risk of complacency. But you ask yourself, every day are you going to be worried about, complacency factor and going to miss out on the market rally? So how do you play this market? I think the FI internals, the data is suggesting how to play this market, which is go long and create your hedging positions via index puts. So the put options have fallen really dramatically in terms of pricing, and if you want to hedge your positions, you can easily do that via index options. So yesterday also there was cash market buying, 750 crores, but I think the cash market buying clearly was seen in two stocks, Axis Bank and Yes Bank. Axis had delivery-based buying of 400 crores, Yes Bank for a stock like Yes Bank 250 crores of delivery-based buying. So big delivery-based buying in both these stocks. No major pickup in other stocks as far as the delivery-based buying was concerned. This index futures buying that you saw yesterday, 1500 crores, my sense is that most of it was, or a lot of it was in the Bank Nifty futures. And that's the sense you got that yesterday the Bank Nifty could well have broken out. 350-point rally on the Bank Nifty, 2% higher. And it's made a base around that 18,500 mark and could be ready to move on from here. There was buying in index options as well. And in that you saw quite a bit of put build-up as well. That was mainly for hedging purpose. You saw 8,400 to 8,600 puts adding a lot of open interest.
So 8,400 is hedged, you would think?
I would assume that 8,400 looks like is the new base for the market. The base for the market well moved up from 7,900 to 8,200 and may now well have moved up from 8,200 to 8,400. I think the stop loss for long trades is now 8,500, which was the resistance mark, now becomes the support mark. Any 20-30 point dip, traders should be buying. And individual stocks you could well buy. You could just choose 5 or 6 stocks and keep buying them. Yesterday also a new high for Nifty Junior. Today I think we might hit a new high for mid-cap index as well intraday. I think on
it's
closing
100
basis,
points off.
less than that I think. Nifty Junior is already there. Mid-cap index hit that. So we are there. I mean, I think for the screen is telling you that it's bullish. The only risk is complacency, but that alone should not prevent you from taking long positions. I mean, at the end of the day, the market is rewarding you if you're taking long positions, and it's time to participate in this market. Have your stop losses. If you're stopped out, you're stopped out. But there's no way that you should not be participating in this market.
All right. So, well, the market by the end of this week is already up about 3-odd%, not considering what we've seen today. So it's been a very healthy week for our markets. But here's what you'll